Good morning and welcome to the BYOTROL PLC Final Results 2022 Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. You can be submitted any time via the Q&A tab situated on the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and will publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to David Traynor, CEO. Good morning.
Morning. Thanks very much, Paul. Good morning, everybody. Thanks very much for joining our call today. I have two new faces joining me on the call today. Both of them are making a huge difference to the business and who you're going to hear a fair bit from as we go through the next hour or so. Chris Sedwell, there with the glasses and the headphones on, is our new full-time CFO, been with us just shy of a year so far. He's ACA qualified with Deloitte. And he has a lot of experience in divisional FD roles at companies big and small, including manufacturing, retail, and very relevantly for us, several years at the healthcare giant Convatec. And then Vivan Pinto, who is our first Chief Growth Officer, CGO. He is responsible for our sales, marketing, and strategic activities. He's US educated. He has an MBA and a master's in IP law. He joins us from Johnson & Johnson, where he's had a series of general management, sales, marketing, and leadership positions in various parts of the globe. And prior to that, he was at Pfizer and at Reckitt Benckiser, and also a stint in private equity. And both of them have been a bit quiet for the last few months because we've been looking at the business, analysing things, and hopefully you'll see the results of that as we talk through strategy later on. Okay. So, it's been a really unusual market for us in the last 18 months. And of course, it has been helpful in many ways by boosting sales, boosting demand, and boosting cash into the business in the short term. And it's also increased the long-term growth prognosis for our business as well. And most analysts are saying that underlying demand for healthcare products and infection control products prior to COVID was growing at 5% per year. And now it's between 5 and 10%, and nearer to the 10% number, depending on which segment you're looking at. But it's also been a little bit unhelpful in some ways because we were busy selling so much material and making so much material, selling it where we could, that it skewed us away from the long-term strategic activities of the business and caused us to lose a little bit of focus, which was necessarily the case, but it certainly had a little bit of a distracting effect. And in the last 6 to 12 months, we've been dealing with a degree of indigestion in our market where there has been too much product supply and capacity chasing more demand than there was pre-COVID, but not as much demand as there was during the COVID time. So there's been a bit of indigestion we've been dealing with. And I would say that most businesses in our sector have been struggling a bit on sales and also company valuation as well. But that is now very much dissipating. And we're returning back to long-term trends, albeit at a higher growth rate than it was historically. So when we look at the market that we're in generally, we are seeing demand still increasing and still massive globally. We're still looking at a very fragmented supply chain, and we're still seeing the impact of regulation in the buy-side world having a big impact upon the way that competitors are behaving and competing. And we're still absolutely convinced that our positioning as a very science-based, regulatory-driven company in this marketplace is exactly the right positioning and is going to lead to excellent returns over time. I would define the way we have approached the last few years as we were doing quite well prior to COVID. The strategy was starting to come to fruition. We made a small profit before COVID. COVID caused us to make a big profit. But instead of raising money when our share price was particularly high, we decided to invest the returns we were making back into the business. And we have basically upgraded our systems, our IT, and our people quite substantially. And I think we have probably saved about 500 grand in costs from the integration with Medimark, so 250 grand over 2 years, each of 2 years. but then we probably added about 400, just over 400 grand in people cost into the business, all in new roles. That'd be, half of the CFO. We had previously Nick Kelly was only part-time, a full-time chief growth officer, a full-time marketing team for the first time, and team and resources and assets to support the activity of those new people and get as much leverage from their capabilities as we can. So the position of the company actually is very similar to where it was pre-COVID and during COVID in terms of how we see ourselves making money. What we have done, though, is made ourselves a significantly stronger business coming out of COVID than we were going into it. And we've done all sorts of things behind the scenes in terms of focus and strategy and integration and all the sort of the gritty stuff you need to do to make us a stronger business for the medium and long term. So we'll come back to that in a second, but I thought first of all I'll hand across to Chris Sedwell to talk a bit about the finances.
Great, thank you, David. So for the summary P&L financials, we've included FY20 results here to give a more balanced comparison of FY22 performance, just given that FY21 was so significantly impacted by COVID-driven demand. As you can see, product sales are broadly flat compared with FY20, significantly reduced, of course, on FY21, with IP showing strong growth over the last 2 years of £335,000. Total sales, therefore, are at 6.3 million for FY22. Gross profit has remained consistent with FY20 at 48%, so very healthy. OPEX, adjusted for exceptionals and the other usual adjustments to get to EBITDA, is at 3 million, so slightly down on FY21, but up 582,000 on FY20. That increase driven largely by increased investment in both staff resource and our R&D program, both providing the platform for strategic growth, which both David and Viv will discuss in more detail in the upcoming slides. Adjusted EBITDA is at 39,000. So just moving on to the next slide, which is the balance sheet. Again, we've included the FY20 and FY21 comparatives. Versus FY20, we see a small increase in net assets, although a decrease on FY21. Some points to note on the balance sheet are intangible assets at 3.5 million, and this is driven by our ongoing investment into Seaweed, the Natural / Artemis, and HLD4 / Cruise replacement projects. More about those later in the deck. Long-term receivables strengthened to just shy of 1.6 million. And this represents discounted guaranteed future cash streams from our IP agreements. Stock has dropped to 0.4 million. As noted in the prior year, there was a stock build towards the end of FY21, anticipating ongoing demand triggered by the COVID pandemic. During FY22, we saw that demand fall away whilst high levels of stock in the marketplace unwound, as we've already commented out in the public domain. That has not only impacted our FY22 sales, as you've seen on the previous slide, but has also led us to provision against slow-moving stock triggered by the sales slowdown. Cash remains strong at 1.1 million. The movement on the prior year reflecting the impact of restructure costs and our investments into staff resource and the R&D program that I've mentioned previously. David, on to you for the next slide. You're on mute, David.
Beginner's mistake, thanks. The new finance team obviously have sort of shone quite a strong light into the deepest corners of the business. So we've taken a few provisions as Chris has cleaned up the business and the balance sheet as much as he possibly can. And we can talk more about those in detail if you'd like in Q&A. So in terms of going back to my comments on long-term trend, I mean, when I first started this business, in this business about 2013-14, there was all the blue numbers there. So the gross margin, which is the line, the dark blue, the medium blue, and the light blue, which is revenue, gross profit, and adjusted EBITDA in turn, were all very much in the bottom left-hand corner of that page, with more blue below the zero line than any business would like to see. We did all the hard work on technology and positioning and so on, and gradually the business has improved quite substantially since that time. So the lines are all above the zero line, and the gross margin in blended terms has been generally picking up. So the big outlier, of course, is 2021, and while of course we enjoyed the resources that generated, that does distract somewhat from the long-term position of the company, which I think is strong. And sometimes people said to me that we're viewed as a COVID stock, and we're not. Actually, we're a buy-side stock driven by regulatory change and by market demand, long-term demand for buy-sides. So we expect those charts to start moving further towards the top right-hand corner of the page, and that is why we are spending more time now focusing on fewer segments, fewer markets, and so on, as Viv is going to talk through in a second. But before we get on to the strategy, I want to just deal with a couple of things I know I'll get lots of questions on, and that is IP and seaweed. We've said sort of publicly that in IP terms that we look to generate between 10 and 15% of revenue every year from our IP activities. And that'd be a combination of payments and monetization of IP that we move to a third party, but also minimum guarantees and profits from royalties and commissions that we are generating with the licensees. Now, in the same way as the market has been tough for us in the last 6 to 12 months, it has been tough for our licensees as well. And the majority of those licensees that you see there are not paying us any more money than the minimum guarantees that they agreed to pay when we first did the contract with them. So what that means is that they've not had much impact on our P&L in the last financial year, but we have been receiving cash, which is cash they agreed to pay us when we first signed up the deal with them. So P&L neutral, cash positive from those licensees. Now, going through those individually, the big one, of course, is Solvay. With the ActiZone technology. And the latest position is that we have invoiced them now for our first commission on their sales activities so far. It's a small number, but it is the first invoice. And we know that there are still huge amounts of resources going into their activities in ActiZone around the world, both on technical and regulatory, but also in sales and marketing. The big thing that's going to unleash proper revenue from them is that they are due one more registration approval in the States, and that is from the US state of California. So they have the federal approval, the governmental approval already for their various formats and claims, but they don't yet have all the individual states, and California tends to be an outlier, and we're expecting it any minute now. But it still hasn't arrived, and we don't understand there are any particular problems, but it is a little bit slower than they thought it would be, probably because of backlog of regulatory work that they're doing in buy-sides. But we know that when that comes in place, that will unleash, we think, 2 customers domestically in the States, and we think it will then unleash bigger demand from the existing customers, which include a couple of multinationals and a couple of regional players in Asia, because then they can tap into the global supply chain that the bigger customers are requiring. So we don't get any visibility on the types of deals that Solvay is doing with its customers, and we don't get formally told who those customers are. And of course, in the same way as I get asked all the time who they are, I just don't. Solvay get asked too, and unfortunately the various chains of NDAs mean that we can't give you much granularity on it. But as those products start coming into market, we'll be able to point you to where those products are and give you a clear steer on whether or not it's based on the ActiZone technology. So we expect that to start feeding through to our P&L a little bit better this year, and then the following year in larger size. Now, of course, the customers Solvay have to be successful for us to be successful, but the signs are really quite good at the moment, and we remain confident that it's going to be a good revenue generator for us. Tristel has been focusing more on its chlorine dioxide technologies in human health, and it's a little bit unclear as to quite how much resource they're going to put into non-chlorine dioxide, which is the technology that we provide outside the human health space. So we're talking to them about that at the moment, but they're paying at the level of minimum guarantee on the technologies and chemistries that we're providing them with. SC Johnson Professional is the alcohol-free hand sanitizer into the NHS. That's been a very difficult market for obvious reasons the last 6 to 12 months. They're currently paying at minimum guarantee levels also. Turkey Wax, ditto. And then the one that is relatively new is Integrated Resources. Now, you remember that we sold our BYOTROL 24 formulation to Integrated Resources in the States, with them due to pay us over the course of three to 4 years. We received some cash for that already. We have been helpful in generating a new sub-licensee for Integrated Resources that is a household name in the States and globally. And they are currently putting through their own EPO registration with their own branding based on the BYOTROL 24 formulation. We expect that product to be launched in early 2023. It is a sizable name, and I'd love to better publicise it, but I'm afraid I'm just not allowed to right now. But you will see it when the product is launched, and it's very exciting and beneficial. It'll be very beneficial for the business overall. Advanced Hygienics is an old licensee that back probably 6 or 7 years ago in alcohol-free hand sanitizers in the States that struggled a bit during the pandemic because the US regulators refused to sanction alcohol-free as being equivalent to alcohol in performance terms. And then I'm afraid the head of the business had a heart attack, and so the business is struggling somewhat right now. We have taken a provision for those minimum guarantees in the future, but we expect it to start generating some cash anyway as the main move in the business starts to regain some health. And BioX to South Africa is a very small transaction that is doing fine. We inherited that many moons ago, and it is not material for our P&L or balance sheet at the moment, but who knows what might happen as they grow. Okay, I was going to stop there on intellectual property. Please send any questions in if you want to talk if you want me to talk more detail later on. Moving on to seaweed. So a lot of work going on behind the scenes with our technical team on seaweed, and all of the results that we've been getting are positive. So we have confirmed the performance capability of the seaweed as an antiviral. So what we found is that it's very broad acting against viruses, both enveloped and non-enveloped viruses. We've found that it works at very low concentrations, and we found that it works at very short contact times, which are the key things that people look at for these type of products. It is, as I think I said before, very antiviral, but not antibacterial. So on one hand, you might think, well, that's not very good as a biocide. On the other hand, actually, it means you can put it through your body and system without damaging the good bacteria, but still impacting helpfully on the viruses that are in your system. We found that it's better as a prophylactic than as a cure. So what it does, and the photograph shown, I'll talk more about those in a second, it sort of clumps around the viruses and it stops them attaching to cells. So if you can ensure the viruses come into contact with the extract that we have, maybe as it's going through your mouth or through your nose, it will stop the viruses then attaching to cells in your system and hopefully prevent you getting ill. And the imagery down there is work that was done for us by University of Liverpool, and it shows a magnification, I think it's to 1/10,000th of a millimeter. Against flu and against the cold virus, and the red arrows direct you to the viruses with no treatment, and then the green arrows in the next two slides are a crude extract of the seaweed that we use, and B, an enriched extract. And you can see those little dots starting to appear around the viruses. That is the extract that we use. It's called fluorotannin. It's something that's not particularly used in the healthcare industry right now. We think we found something that is very underutilized and relatively new, but in pure form on the right hand side there are those three columns. You can see it's in large size agglomerating around the viruses and preventing it work. We have done comparative testing both internally and externally with external houses to show its efficacy, and those are confirming what we're seeing. We have 2 global companies testing the extracts with us right now. One is in nasal care and one is in oral care. they are fairly early stage, and we are just now figuring out the other areas that it might be applicable in. We have taken a bit more time at understanding the mode of action, and the supply chain and the costs and the extraction process and all that sort of stuff, because when we go and talk to big customers, we want to be able to talk to a level of detail that they find interesting right from the start. But it remains very exciting. We think it remains very valuable, and we are still putting, in a very careful way, resources into it because we believe that it will be long-term additive to the value of the business. So that's seaweed, and again, I'll talk more about that if you like. But I want to move now on to strategy, which is where I'm going to hand across to Viv. Over to you.
Thank you, David. So for my deck, I'm going to share some of the insights driving our change in strategy, really towards making some clear choices to drive margin improvement, driven by our fantastic R&D platform, and ultimately to future-proof our business in the face of the biocides product registration, which will change the landscape across Europe in the coming 2 to 3 years. So when we look at my slides, I'll go through just 3 slides. The first will be a planning framework. Then I'll talk about market insights. And then I'll talk about an action plan. And then finally, David and me together will talk through the long-term ambition. So when I look at the first slide about the strategy planning framework, it really breaks into 3 areas. The first area is the historic performance of BYOTROL, where in 2013, we had sales of 3 million with a 1.5 million operating loss. Now by 2022, we've moved towards a 6 million sales company, which has got an operating profit, which is fantastic. This has really been driven by 3 things. First is, as mentioned, the expansion of our R&D base. So we moved from a 1-product company in 2013 to having platforms of technology which power our products. The second is the acquisition of a leading position in animal health with the acquisition of Medimark in 2019. And finally, of course, even though it's been volatile, the pandemic has generated cash and investment for us. And these 3 things together have really moved us from a startup into a profitable organization. So now on to the second stage, which is really what are we doing in 2022 and beyond? Well, what we're focusing on is our next growth phase, which is really about focusing on building a core, profitable, sustainable business with profitable growth. And we need to do this by making the right choices in our portfolio, in our technologies, and in our customers, and investing in R&D ahead of the BPR regulations. These choices will allow us to focus on high-profit niche markets as the competition potentially falls away in these segments, allowing us to maintain that growth and reaching critical mass over the next 3 years. Finally, our last stage is our long-term growth ambition, which is to reach sales and profitability, which allow us to invest in expanding our technologies through biocides in a post-BPR environment through Europe with comparable valuations and multiples to keep competitor MNCs like Tristel, Animal Health, Diversity, and Ecolab. Okay, now why don't we move on to the next slide, David, which really talks about the flavor of how we look at the market and how we drive the insight. So if you take a look on the left-hand side, you can see the overall biocides market, which is worth $13 billion globally. You can see that in Europe, it's worth about $5 billion. And within that, you can see that the biocide market is classified according to product groups. PT1, which is human health, PT2 and 3, which is surface care and animal care respectively, and then PT4 and 5, which is food and water. So in terms of where BYOTROL focuses, we really focus on PT2 and 3, which is about $4 million of sales. So that's really where we focus when we look at our products and our technology. Now, if we then take a look at the small pie chart at the top, it really breaks down the European market. The key insight we have here is that the UK accounts for about 20% of the European market. However, the UK accounts for 85% of BYOTROL sales. So there is a huge opportunity for us to expand in Europe, particularly as our competitors are facing the challenge of registering their products as they progress with the biocide product registration, where by 2025, either their products will have to have a complete dossier and registered, or they will be removed from the marketplace. So that creates a great opportunity for us. And as mentioned, we have to focus on driving the key choices which drive profitability. So we will focus in Europe on Germany and France, which together account for about half the European market. Now, let's take a look at some of the niche segments we will focus on. So if you take a look at the third lower pie chart, it highlights a specific niche segment in the UK, which is the pets and companion vet market in the UK. And what this means is basically dealing with household pets like cats, dogs, guinea pigs, basically any small animals you can have in your house. And we already control a 50% share of the market, of that market segment, through our acquisition of MediMark. Now, as you can see, it's a relatively consolidated marketplace with three key competitors, Tristel, G9, and Say4. Now, those three companies really have to decide what do they want to do when the biocides product registration hits. They will either need to register their products or they will exit the market. And that's really a challenge for them, considering that BYOTROL has a BPR approvable product already placed to launch in the marketplace. So really, we have a tremendous opportunity to drive chunks of share gain and do it very profitably within that segment. Now, I won't go through them in detail, but obviously we've identified several other segments within PT2 and PT3, as well as PT1 and consumer, which we can use to drive profitable growth. The key thing all these segments share is the ability to drive up to 60% margin when we are in those segments, and to drive incremental business as competitors fall away through the BPR process and regulations. Okay, David? Now moving on to the next slide. It's not just about those niches where we invest. It's also about making tough choices in those segments and categories where we compete as BYOTROL. So what you can see is on the left side, in 2022, we compete in 6 segments in total, right? As we move to 2025, we'll reduce that to 4 segments. Now, out of those 4 segments, we can see we'll expand in human health. The second segment is business development, and that's a really important segment, which you can see we're expanding, as whilst we focus where we compete on niche segments, we make the right choices to compete and enter only into those segments. We will still monetize our platform in those segments where we can compete through business development. And we can talk about that a bit later on, and also share some of the exciting things we're doing. For example, in seaweed, where we will enter that platform in partnership with a multinational, which will generate for us royalties and gate payments in the short and medium term, even though it takes a long time to obviously create and enter the pharmaceutical and healthcare segments. Okay, moving on to the next slide. Now, this is just a slide which, we've talked about strategy, but really it's very important for us to talk about action. So I won't go through this in all the detail, but let me highlight a few of the key things which we've done. So we've been very busy year to date, putting the strategy above into reality. We've reduced our SKU count from 200 SKUs down to 140 SKUs. So that's really about making those choices. Second, we've reduced our divisions from 7 to 4 by the end of 2024. We've consolidated our customers. So we've taken our top 100 ManyMark customers, our biggest ManyMark customers, and folded them into BYOTROL, as well as our bottom 300 customers, which we've now licensed to partner with a third company. And these customers, by the way, generate around £70 on average sales a year. So they're not big, but definitely we want to maintain that business, but through a third party to deal with the day-to-day operations. In terms of our platform R&D, we've really focused on building platforms and R&D so that we don't have just products for today, but we have products which will be around post the BPR and beyond. So we have in place a stage gate with financial and R&D assessment as we go through the process on a regular basis. We've completed the ManyMark integration and closed the office in Seven Oaks, as well as exiting key areas such as PHMB, which we will exit in 2023. Which we will exit in 2022 end of calendar, as well as HLD4, as well as medical devices, which we will both look to exit around 2023 calendar. Then we also have our company's strategy, which we're relaunching and sharing with you today, as well as making a commitment to have more regular news flow, which we will share with investors. So as we proceed through this journey, we do it together and we increase our transparency and visibility with you, our investors. Looking at the long term, once we get critical mass, we will expand our technologies post BPR as we expand in Europe. And this will allow us to attract multiples of larger MNCs in our category. And I know all of us in the management team are very excited to be part of this journey and go through this process. And we're so excited, in fact, that we all invested in the company in our last funding round so that we can get a share of that fantastic growth potential. David, I'll hand over to you.
Thanks very much, Viv. I probably should explain. So Viv's sounding rather like a mafia don at the moment. He had a procedure that's led to a temporary impact on his vocal cords, and we were trying to trade off whether actually he should be silent in this or whether we get him to speak. So hopefully, I was very keen for investors to hear the new team speak. It will sound significantly better in due course, but there's been an awful lot of analytical work going on behind the scenes, which has meant that there's substantial rationalization of the lower margin stuff. There's much more focus on economies of scale, all the big picture, sort of gritty operational things that you would expect a company to do. We are doing big picture, as I said, but also at the absolute minute level as well. And I think I'm not sure if it came across, properly, but basically we are going from 7 technology platforms to 4. We're going from 7 service segments to 4, and anything which one of those segments is business development, which is stuff that we view as non-core that we can sell through IP. We're slashing our SKUs, we're taking out the long tail, we're focusing on higher margin activities, we're building economies of scale. All those things are happening that mean that as the indigestion in the market sort of disappears, we're a much sort of tougher nugget of a business, and hopefully product sales will be more than covering our costs, and all the IP stuff is then sort of cherry on top of the cake. And that's what we were trying to do pre-COVID. Obviously, COVID sort of turned us into slightly different directions, but we're back on that now. But I think we're a much better place to do that now than we were. So when we talked about the longer term strategy, that's where this chart comes from. It is, once we have something that is consistently profitable and projectable, then the world opens up for us very nicely, because this scientifically led, regulatory approved position that we have works in several markets in the biocide world, but also in other products that use biocides in different formats. So we can see all sorts of routes to growth. But the first thing is to get the core of it working much more efficiently than it has been so far, and make us more resilient than we have been so far. That's the plan. Okay, so that's all we're going to say. I'm happy to answer any questions that you have. I will give you a little summary at the end about the core positioning that I hope we've got across as we talked. But I thought maybe we should move on to the questions now.
Fantastic. Thank you very much indeed for your presentation. Ladies and gentlemen, do please continue to submit your questions just using that Q&A tab situated in the right-hand corner of your screen. While the team take a few moments to review those questions submitted today, I'd like to remind you that recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. David, as you can see, we have had a number of questions throughout today's presentation, and thank you to all the investors that have submitted those. Could I just ask you to click on that Q&A tab and, where appropriate to do so, just read out the question, give your response, or direct it to a member of the team? Thank you.
Okay, all right, great. So I had a question in before the session on supply chain, what we're doing around supply chain, which I think is a very good and relevant question at the moment, current markets. The truth is supply chains have been very difficult across the whole industry for some time. Clearly, COVID was very difficult because there was huge amounts of competition for limited supply of ingredients, and packaging was a particular issue. And that has alleviated somewhat since then, but now we have issues around border closure and wars and input prices going up and all sorts of strange things happening. I think we've actually managed quite well so far through working in partnership with our contract manufacturers. And I think on the whole, we have delivered above plan in supply chain terms compared to many others. We have been looking at it though in a lot of detail since, and we have made the following few steps. So we have invested quite heavily in the team, both at individual personnel level, but also at leadership level. And we have a new supply chain head joining from a very big company on the 1st of November, and he has been helpful to us behind the scenes already as he gets ready to join us. We have new systems and processes being introduced. We have pretty much completed the integration of Minimark now, and they're operating on a different IT system to us, with a whole set of different processes to what BYOTROL had done historically. That is now being put together, and we're starting to see the fruits of it in efficiency and customer relationship. We have decided to withdraw from China. So China is really, really good when you have high volumes and you want to do short production runs. Short production runs across a whole series of SKUs at relatively decent pricing. But obviously the world has changed a bit now, and the security of that particular supply chain is now less than it was. So gradually moving the key SKUs across to the UK primarily. We're rationalizing SKUs and technologies, as we already said, which makes the supply chain much simpler, means to longer runs and better pricing overall. And we're spending a lot of time with suppliers, building better and stronger relationships so that any issues that we face, any challenges we face with them, rather than on a sort of customer supplier basis. And that is going quite well, although, you know, it is one of the parts of the business that always induces a bit more sweat than the others. But that I think is true for the industry across the board at the moment. So in terms of the questions that came through during the session, first question from Sammy: how should I look at the sales process for BYOTROL, and how much visibility do you get from partners and sales in general? Viv, do you want to have a go at that? You're on mute.
There we go. Yeah, in terms of the sales process for BYOTROL, one of the processes which we've implemented as a business is to run a professional monthly sales update. So when we look at sales in a monthly basis. We know what our open orders are. We know where they're coming from. We plan joint business forecasts with our customers, and we go through all of that weekly with a weekly sales meeting to really understand what are we coming in with. So what you'll see is that going forward, we'll have a much more visibility on our sales process, as well as a way of moving from historically understanding where our sales coming from towards looking more in the future and working in partnership, setting up joint business plans with our customers so that we can predict and plan our sales going forward and plan our investment accordingly to identify which sales partners, which customers do we want to really place our bets with and invest in.
I found myself describing BYOTROL to an investor a couple of days ago as if we were a plant in a garden during the COVID period. we looked above ground, pretty much like a route network, with absolutely everything all over the place. And what we've been trying to do the last year or so is try and sort of narrow that down to 3 or 4 different sort of major platforms and fewer SKUs and so on and so forth. That has the nice thing of doing mean that we can then plan it better, have much more consistent conversations with our customers, plan our supply chain better. And that's one of the things that Viv has been doing with the help of the analytical sort of expertise of Chris. So we have much more visibility than we had before, because it's a simpler business than it was before. The tougher one is the revenue from and commissions from licenses. When you structure those deals, you set them up, and then you have your licensee or partner agreeing to pay you minimum guarantees over a certain time period, that we normally structure as less than 50% of planned sales of that licensee. Then how they do, we only find out after the event, because we have quarterly, semi-annually or annually sales figures that come in from them that we then apply the royalty to and then invoice them for that. But it's always after the event. And I think as we grow and as we bring more people into the sales, marketing and commercial side of the business, then we'll be able to do a much better job of forecasting what those likely revenues are going to be. And hopefully that will then feed through to us to be able to project further into the future to investors than we have been so far. So all this hard work behind the scenes is so that we can be a much more serious business to you when we come and talk to you on a semi-annual basis. David S., where do you start the process with majors to license from you? Well, let me answer that one. It's big ticket sales, really, and it is relationship driven with companies that we think are in the space, will be interested in the space that we are currently doing R&D work on. We talk to the majors through scientists, if we can build those relationships, but also on the commercial side. We have on the seaweed process, what we're doing right now is we do the core amount of work that we think is necessary to get the majors interested. Then we have when we have sufficient data that we think we have an impressive presentation, we will then go and talk to between 10 and 20 big companies we think will be interested in the space. And interestingly enough, the longer meetings tend to be with people who are already incumbents. But actually more exciting meetings are those where there are companies who are looking to get into that space and are looking for like a stormtrooper of a product to enable them to build a bridgehead. And what we don't really know until 2 or 3 meetings, conversations taking place as to who is real and who is likely to pay us some money. I would say that from scratch, the commercialization process from idea through to some degree of validation, be it a joint development deal or a commercial deal or something where big companies put their name alongside us, is certainly more than a year. Probably more likely between 18 months and 24 months. But when you get them, they're very, very good and remunerative and compensated transactions, but also they build credibility to the business because everybody else is trying to do licensing knows that the process to get these companies like Solvay to sign up with you is a very difficult one to do. So I like it because it confirms the quality of the technology as well as generating us some cash and profits as well. Neil B., what are the potential sales for the new EU BPR formulation launching in November? Does it have regulatory approval? Viv, I think that's one for you. Do you want to talk about cruise?
Yeah, of course. So when we look at cruise, the sales for the EU BPR formulation are tremendous in Europe. As I mentioned, currently 85% of our sales in the UK. So by going focused into Germany and France, we're accessing effectively we're accessing 50%, so probably 2.5 times the market size we have in the UK. So that's going to be a fantastic initiative. In terms of regulatory approval, it's complicated the way the BPR approval process works. What we have to do is that if the regulatory approval itself takes a year. However, when we submit the application for the regulatory approval, the products can remain on the market until the license is granted. So effectively, by submitting the regulatory dossier by the beginning of next year, we will then be able to have the product on the market effectively all the way through the BPO process and then continuing on the market. Now we know, because the actives are quite established, that the product itself should be regulatory approvable. So we don't see an issue there. But it's really about going through the processes, both in all the countries as well as through the EU, to secure that dossier. And that takes time. So pulling all of that together and having a product which we can launch on the market is really a fantastic step forward and should put us a step ahead of our competition in that procedure.
Thank you, Viv. I've got a good question here from Graham W, who asks, you refer to your Naturals Artemis platform as distinct from seaweed. Can you expand a bit on this Naturals platform and any IP around it? And that's a good question. It comes to something that I want to spend a couple of minutes on, which is further down in the deck. So these are the core technologies of the business at the moment. And if you'd been talking to us a year ago, 2 years ago, you'd have seen there are probably 7 different technology platforms that we operated within, and we have stopped doing some things. So we've stopped working on quat-based, quaternary ammonium compound-based products for the food industry, where we had such a tiny niche, we couldn't justify the regulatory spend, the technology spend that was going into it. So we stopped doing that. We stopped doing medical device work on some of our core chemistries. So there's a number of things that we have stopped. And what you're focusing are on the following. So Cruise is an updated version of Medimark's core chemistry called High-Level Disinfectant 4. That is the one that we're relaunching in November, with an upgraded performance characteristic that means that it will satisfy the new regulatory controls in animal care. On the right-hand side, In Virtue is our skincare product, which alcohol-free, that we'll carry on supporting. That's a good revenue generator for the business. And then the two in the middle are a subdivision of a program that we had in Naturals. So seeking biocidal products that come from natural sources and that are sustainable. And this is by some distance the hottest area of our industry for obvious reasons. The difficulty, though, is to get natural ingredients to work as well as the non-naturals. And what we think we have are 2 sets of formulations that do work very well compared to the non-naturals and are superior to their natural products. So one is a seaweed project. I've already talked about that we has good potential, but we think is a slower burn. And the other one is called Artemis, which is a project based on using natural oils and natural biocides that seems to be extraordinarily efficacious against a broad range of bacteria and viruses. And the testing that we're doing on it is getting us all very excited that we have something that does actually have that Goldilocks position of really high performance, but very natural and sustainable too. And those are going to be our main focuses for the product side of the business, and also a little bit of IP. And what we're doing is we're taking those core chemistries and we're effectively relabeling them and repackaging them for different executions across consumer, across animal care, and across some niches in medical and human healthcare as well. And that's all we're going to be doing. So we're reducing quite a lot our spend on technology, reducing quite a lot our spend on regulatory, and we're really focusing on, like a top quality pharmaceutical company would, on a core technology that we believe in, that are future-proof for regulatory purposes, but then we can then put out in several different versions into the markets that we're favouring. And for us, initially, it'll be a series of niches, but as time goes on, we'll be able to increase the size of our activities. So seaweed and Artemis are come from the same initial R&D program, although because of the way they perform, they're now split into 2 separate projects, but both are very valuable. Thank you for that question, Graham. I hope I've answered it. Neil B, there's still no forecasts available for the company. Is there any directional guidance as to whether current year should be ahead or down on year-end March 2022? Yes, I get asked this a lot, and it's a very fair question, and I wince slightly when I see it, because I know that we should have projections out there. We have been planning to put up projections around now. I think it's probably going to be around the end of this financial year. And we're going to look to project, around the end of this calendar year, for financial year March. And I think we're going to look to project out just for this current financial year, but also beyond, based on better granular forecasting we've been able to achieve so far. The reason we haven't done it so far, there are 4 things that are skewing our numbers. One is, again, IP deals, which tend to be bilateral, and we need a bit more granularity on that. 2 is there's an ingredient that the UK looks at that's going to be banning more quickly than we expected under the UK version of the biocides regime, that we're looking to see if we can replace
PHMB
with other chemistries. Europe is looking, we expect it to happen in 2 years' time, which is what continental Europe is doing. UK's brought it forward by more than we expected. We are still looking at investment into the future versus keeping our costs down to sort of increase profitability. And there's one other, I forget what's the other one.
That's it. That's it.
Okay,
yeah.
Okay, there's another one. Yeah. So, but we will do that. We know we need to put projections out there, and we would view that as hopefully as a valuation event that people will like. But obviously, I don't want to put anything out that I can't sort of absolutely put my name in blood against. So we're taking the route of caution at the moment, but we will address that as soon as we possibly can. And Margaret, thinking about the slow-moving stock provision, is there any potential for selling that stock? Chris?
So the short answer to that is yes, and we have been working on that with Viv's team. So we will continue to work on liquidating that as best we can. I think the key thing is that we provided for it instead of scrapped it. So that means there is still a potential value, and we're working hard to achieve that and liquidate that within the coming weeks and months.
Absolutely. As a sort of a professional selling team, which we're now striving towards, we would certainly have different opportunities in terms of what are the stock and product ranges we want to push strategically, but also understanding that, you know, there's certain stock levels, hangovers from the pandemic, which we actively do try and trade as well. And we incorporate this into our monthly sales targets.
Great news on James K. Great news on Solvay and seaweed. Well done. However, it's taken 9 years to go from 3 million to 6 million in revenues. Are we not just too small to compete? Would a merger or outright sale be a better option for all shareholders? Well, that's up to shareholders, really. So I leave that to them to give us their views. That's certainly not what we're hearing so far. I think the thing is that we have spent an awful lot of time and effort on getting our technologies up to the level that delivered the promise of BYOTROL, 10, 15 years ago, and in a marketplace that is looking for that sort of thing. So our view is that with a much more efficient business we had before, with better margins and technologies that are way better than anything we had before, I think it would be a terrible thing for us to sell right now, because I think there's a lot of money to be made. And I think, you know, the fact that I've been able to recruit such high quality people into the business, you know, sitting here, but also at board level and within the team, suggests the team believes that too. And the fact we're putting our own money into the business in size shows that we believe we have something. But you know, there's always a chance someone can come buy us. We're a listed company. If they wish to do that, then we will address that at the time. Harry F., are you aware of any competitors also researching seaweed? Yes, seaweed contains all sorts of stuff though. So there's a lot of work going in on fluorotannins, all sorts of extracts for foodstuffs, all sorts of things going on. And there's all sorts of good data, including sort of tests on sheep that show that seaweed-fed sheep are some of the most healthy sheep you ever get anywhere in the world. What we have, though, is a focus on a particular form of the seaweed, fluorotannins, where there's actually very, very literature going on, and there seems to be very, very little competitor activity. And we think that we have something that is an improvement on many of the studies currently taking place elsewhere in the world. The difficulty we have that we think is probably more of a pharmaceutical or a foodstuff style value than in our natural area of biocides, and we're trying to figure out how we best monetize that, and it's probably with a partner. So we're going to know in the current round of commercial discussions that we're having with bigger companies whether or not that is indeed the case. And if we start to get information that is too far away or we can't extract any value relatively soon, then we will stop it or downgrade it compared to other things that we're doing. So we talk about this every single month at the board meeting. But at the moment, our view is that we have something that's special. And Margaret C, are we able to pass on any raw material price increases? Chris, do you want to have a go at that?
Yeah. So yeah, we are seeing, as is commentated on widely at the moment, we are seeing raw material and energy price increases impacting our supply chain and ultimately our cost of goods. In terms of how we are passing that on, I've been working very closely with Viv now to get a structured price increase, a selling price increase process in place. So that has happened, and we've started that middle of this year. And what we will do is instigate an annual formal price increase process, which the business hasn't really had before. But that will become one of our annual sort of calendared procedures that we'll go through, where we'll monitor those increases in raw materials, energy, etc., and our cost of goods, and then look at how we pass that on to our customers in terms of annual sales price increases. Viv, do you want to add any more to that?
No, I think that's absolutely right. The only point I'll add is as we're going through and making choices in where we want to invest, as I've said, is that we're looking at the market to really understand what are the profitable markets to be in, but we're also looking at our cost base and understanding which products are attractive for us to invest behind. And so, we're going through that process to rationalize our range, and raw material costs and cost inflation plays a big part in that assessment.
Thank you. And we've got time for one more, I think. So Graham W, do you expect to conclude non-core IP sales with guarantee stroke upfront payments this financial year as part of the platform exits? Yes, well, I can't say we expect, but we hope so. I mean, we do have a aim to do 10 to 15% of our revenue each year from IP. Focusing so much on core technologies now and on fewer segments obviously creates opportunity for all the non-core stuff to be monetized in efficient ways. And I think we've been quite good at it so far. So yes, we see all sorts of opportunities for doing that. Again, it's binary, I'm afraid. These things take a bit of time, and you're never quite sure if they're going to sign until the very last minute. But yes, they have plenty of opportunities, Graham. I'm not just quite sure which ones yet, though. I'm not quite sure what the magnitude is either. And that's one of the reasons we haven't rejected yet.
Fantastic. Thank you all. You've covered off every single question that's come through. Of course, any further questions that do come through, the team will be able to review those, and we'll publish responses on the Investor Meet Company platform. David, before redirecting investors to provide you with their feedback, which I know is particularly important to you and the team, could I ask you just for a few closing comments, please?
Okay, thank you. Thank you for the questions and thank you for your attention. I hope you found it interesting. I think I've got 4 points. The first is that the underlying trends all remain very much in place that we were talking about pre-COVID. And if anything, they're better than they were, but there is noise, and that noise is slowly dissipating in terms of oversupply. Second thing is that the team has huge confidence in our position, and we're attracting a lot of very good new people into the business that supports that, as well as putting our own money into the business. The third thing is that we've been a bit quiet, but that's because we're working on upgrading our systems and our technology and our people and focusing on the areas where we can make most margin. We're ready to talk about that now. And the fourth thing is the focus really is extensions. So to just sort of repeat what I think we talked about so far, both. So 7 tech platforms to 4, 6 marketing segments to 4, 200 SKUs to 140, and maybe a bit lower as well in the course of the last year, and a real concentration on our customers, including outsourcing the smaller customers that are taking up an awful lot of time and effort. So when I look at what we're doing, it's a much better business than it was, and I hope that feeds through to company valuation in due course.
That's fantastic. Thank you all for updating investors today. Can I please ask investors not to close the session? You should be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete and I know is greatly valued by the team. On behalf of the management team of BYOTROL PLC, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good afternoon to you.
Thanks very much. Cheerio.
Thanks.
Bye.